When you want to find wonderful companies, it's very good to at least get some ideas to where to look. And one of those websites that I use to find the ideas is called Dataroma. I will share the link in the description below. And without further ado, let's take a look at that website. Hello and welcome to this video. One thing I need to remind you before going in is this website will give you some ideas what companies to look at. It won't give you definite data if the company is good or not. So if you see other people buying these companies, don't just go out and buy them too. You need to do your research. But what does this website provide us? So this website has the list of super investors. That's people that are managing a lot of money, and it gives you their holding. It gives you their buy and sell. These big hedge funds that have more than $100 million to manage, they need to quarterly announce their buy and sell of the US stocks, and just buying and selling, not shorting, not hedging, these sort of things they don't need to report. And if it's not listed in the US, they don't need to report that either. So they need to report something called 13F filing, and they have 45 days after the end of the quarter to file that. So with that information, this website builds a portfolio of those hedge fund managers. But let's take a look at some of them. The reason we want to look at them is I want to show you what do I mean by sloth investors, by people not moving around that much. You don't need to have all kind of diversification to be a successful investor. You don't need to buy and sell all the time. And let's just take a look at one of my favorite investors, Charlie Munger. He manages the Daily Journal portfolio, and that portfolio is worth 161 million right now, and it only consists of 4 stocks. So talk about diversification. When we go in, we can see all the 4 stocks. How many shares does he own and what percentage of his portfolio is that company. And you can see 80%, more than 80% of it is banks, and less than 20% is technology, and that's one company, Alibaba. And let's take a look at the activities. So when did Charlie Munger bought or sold anything? As you can see, each quarter he only did one thing. So in quarter 4 of 2014, he sold some POSCO. And then for something like 6 years, he didn't do anything. And then he bought some Alibaba, sold some Alibaba, but that was for tax purposes. So he bought this amount of Alibabas, but then Alibaba stock went down. So he bought 300,000 more and sold the same number. He bought high here and then sold them lower here, so he can use the tax write-off. And right now he owns 300,000. So that was a tax benefit strategy. But maybe Charlie Munger is an extreme case. So let's go and find Warren Buffett and take a look at his portfolio. So as you can see, his portfolio is very concentrated too. Maybe he has more companies, but that's because Warren Buffett is not the only one who manages this portfolio. There are 2 other guys named Ted and Todd. Those guys are managing these small positions. The bigger ones Warren Buffett himself manages. And let's take a look at activities. So in the past quarter, we can see him selling out of some positions, reducing some, buying some new ones and adding to them. But as you can see, most of them has not so much effect on his portfolio. So as I said, Ted and Todd probably are buying these companies and selling all these companies. But the bigger ones who have bigger effect, we can see only selling one, so some Chevron, and buying some Apple. In the quarter before that, only reducing 2 big positions. The quarter before that, adding some accidental petroleum, adding some Taiwan semiconductor, and the rest is very small. So let's go and take a look at another one. Bill Ackman is one of my favorite investors. And as you can see, he has a very concentrated portfolio too. So 8 holdings, and the value of portfolio is 10 billion. And it's in 4 different industries. So talk about diversification. These value investors, they don't believe in diversification, and I don't believe in diversification either. Diversification is good if you don't know what you are doing, but if you know what you are doing, diversification does not make sense. I have a short video around that I'm gonna link here. But we have some super investors that like to move around a lot too. Let's find one of those. So Michael Burry. Michael Burry is a very good investor too. He is the one who predicted the '08 crash, but his style is very different than other value investors. So if you take a look at his activities, he loves to buy and sell. So he will go into different companies and just get out of different companies, go in and get out. Yeah, doing it all over. So he is not a very long-term investor. So this one maybe you shouldn't take a look at and get some idea, because by the time you see him getting into JD.com, maybe has exited the position. So taking a look at these active investors, it doesn't make sense, because this is at least 45 days after they did this buy or sell. So it doesn't make sense to follow them. The other nice feature that this website has is this S&P 500 grid, and it tells you what the super investors owns most. So by ownership number, Microsoft is the biggest one with 31 owners. Google is the next one with 30 owners. Then Visa, Meta, Amazon. You can see what did they buy in the last 6 months, for example. They bought a lot of Amazon. So 28 investors bought Amazon, Google, Meta. This way you can at least get some ideas. Some other super investors believe that these companies are undervalued. Then you can go and do your own research. I hope you enjoyed this video. This is a great tool to use to find some ideas to research more, but be really careful. Do not buy these companies without doing your own research. If you like the video, please like and share it with your friends. Subscribe to the channel. Comment below if you have any questions, and have a great rest of the day. See you on the next one.